Hey folks, it's Doc Severson for your ReadySetCrypto weekend report for Saturday, February 3rd. Now Thursday, I went over the 8 tips to handle the bear market, including a couple of tips to help you avoid getting into trouble in the first place. And today, as promised, what I'm going to go into is how do you get back on board? There's been a lot of people saying, well, shouldn't we be buying the dip here? How do you buy the dip? How do you get back on board? How do you start to participate in this market? Well, this is not only a time of tremendous opportunity, but it's also a time of danger as well, too, if you don't do this right. So today what I'd like to cover is a couple of things. First of all, I'm going to go over the 4 phases to a market rally. And if you've never seen this before, this will help explain a lot of things for you. What I will also show you after that is the 4 ways to ensure that the bottom is in before you start getting on board and start playing as the smart money instead of as a typical retail trader. Okay, so first of all, what we're going to talk about is the 4 phases to a market rally. Now, the 4 phases to a market rally always starts out with usually a market that is in a euphoric phase, just moving to the upside like this. This is where people normally get introduced to the market because the market's running away and there's a tremendous amount of buzz in the news and media and everybody's talking about it, including your barber, including your Uber driver, whomever is talking about a particular market. I've seen this over the years many, many times in many different assets. Markets that run away like this generate tremendous buzz and excitement. So you buy into something like this, and then what happens shortly after that comes the first phase, which is called disgust, okay? And disgust comes when the market starts to sell off, and especially starts to sell off really hard. And the assets that you bought in up at the highs are worth a fraction of the value at this point. And so this comes the point of disgust, and this is typically where most retail traders will say, well, this is a scam, this is a Ponzi scheme, this is nothing more than just another bunch of charlatans out there making a market, so I'm going to sell my position and I'm going to try to recover at least a fraction of what my initial funds were and put it into something useful like mutual funds. And I'm saying that sarcastically. Okay, so that is phase 1. This is called disgust. Disgust leads shortly after this to the phase called disbelief. So first of all, at the bottom, this is where the news is going to be the most negative. You're not going to be able to find any positive articles whatsoever about the asset in question, in this case, cryptocurrency. And we're almost there, by the way. We're almost there. I challenge you to find any positive articles that are in the, whether it's mainstream media or even the alternative media about cryptocurrency right now, unless it's going to be, some kind of subreddit or 4chan. So when the market finally does rally, it comes under huge skepticism. Nobody believes it. Nobody believes it because you've gone from just the darkest depths down here of disgust. And then any kind of rally that comes up from this, everybody's assumption is, well, our hearts are just going to be broken again. It's just another one of these false rallies. It's probably going to roll over and die because this is what everybody else believes. All the news is terrible, so there's no way that this has any meat to it. Everybody just assumes that this is just another false bounce that occurs. And what happens after this is, again, usually you see a little bit more torturous price actions, some more lows down here, and all of the people that claim that this is just another false move self-importantly say, see, I told you so. This thing doesn't have legs. This is just going to roll over again. Again, this is the majority opinion. This is the majority opinion at this time, is that the market is toast. There's no way it can rally from this point going forward. And everybody pretty much buys into that opinion as well too, because most of the news is negative. So that's phase 2. Phase 1, again, is disgust. Market sells off. Phase 2 is disbelief. Nobody believes the subsequent rally. Well, what happens after that is the market starts to rally in earnest. And then all of those self-proclaimed experts look at each other and said, well, that's not what I said. I didn't say that it couldn't rally, right? So you start to see everybody walking back to comments that they made before, and everybody's pointing fingers and saying, well, it's got to be a manipulated market, whatever. But we get into this phase 3, called acceptance. And phase 3 acceptance means that everybody at this point generally accepts that the market in question is going higher. Again, phase 1 was discussed. This is how it starts off. Phase 2 is disbelief. Nobody believes that it's rallying. But eventually, phase 3 is accomplished, where everybody believes that, well, okay, it's rallying. You got me. I have to admit that it's rallying. And what you start to see at this point is most of the news stories are positive by this point, very positive. Again, acceptance means everybody generally buys into the fact that the market is rallying. So eventually what happens is you get into the 4th stage, which is euphoria. So euphoria comes where everybody believes that the market will never go down again. And then what happens is, you guessed it, phase 1 again, disgust. So this is a pretty good example here. If we just look at Bitcoin, we went from a period of euphoria back here in June to the upside. That eventually led to a strong sell-off here, one of the many 30 to 40% declines that Bitcoin has had. That led to disgust. That led to disbelief on the subsequent rally higher, which led to acceptance, and then finally euphoria as we got into the beginning of September of 2017, and that led quickly to yet another cycle of disgust, disbelief, acceptance, and of course as we get into the end of December here, and this is quite a large one, this is where we get into total euphoria. Probably the strongest euphoric reaction that we have yet seen in cryptocurrencies was at the end of 2017. Okay, so this 4-legged cycle happens over and over and over again. It never stops. Sometimes you'll see these legs go on for longer and longer than others. But this cycle is forever with every market that's out there. And it's because of herd behavior. It's because of the way that news is presented. It's because of the way that people make decisions based on commonly available information. People are generally asking their neighbors, what should I do? Should I sell my Bitcoins? Should I sell my cryptocurrency and just go back into mutual funds again? Or should I stick it out? So what do you think the decision is being made? Well, it's their neighbors that are telling them based on commonly available information, yet again. So this is why the herd is always going to make the same decisions at the same time based on the same information and come to the same conclusions. And this is why this cycle repeats again and again. So now I would ask you, as we go to today, what is today's mood? What is the signal showing up today? And we just rolled over into the next day here as we get into UTC Sunday, as I tape this on Saturday night, Pacific time. So we're out here on the west coast of the United States tonight. Well, if you guessed disgust, you'd be correct with that. So of course the next phase that comes is going to be eventually, yes, it'll eventually happen, we'll see a disbelief phase. So this is what everybody's looking for. Everybody's looking for the bounce. Everybody's trying to buy the bounce. So this leads me to the second half of tonight's video, which is how to get back on board. This is what everybody wants to know. How do you buy the dip? Should I be buying the dip here? Should I just be buying a portion of what you guys have in your portfolio? Should I buy the dip? Should I buy the dip? All the questions are out there. So there's this Kool-Aid that's being distributed out there in the crypto world, which is that you got to buy the dip, got to buy the dip. And that's certainly been the case to this point so far, is that at each one of these dips has been bought. But let me ask you this question. If we look back on the last month or so, haven't these been dips? Yes? Yes, these are dips that quietly bounced up a little bit and then eventually created a lower low, did they not? So what you'll find is that the reaction to the downside is very much a mirror of what led it to the upside in the first place. So in other words, the stronger and more parabolic the rally was, the more euphoric the final reaction is of that rally, then the more disgust you'll get on the downside. And certainly there's a lot of disgusted people that are out there, right? So what do we do from this point? When does this disbelief kick in, is what you should be asking. Well, that's a great question. And so that's tonight's part 2, is how do you get back on board? What kind of technical signals from this do you look at with the charts? Do you wait till all the articles are positive again? No, don't use commonly available information published by the media to make your investing decisions. You then put yourself squarely in the middle of the herd once again. This is why charts can be very objective. You will look at what's on the chart and you'll say, but that doesn't match with what is the media is reporting. And you'll have a conflict there because one side will say to you, your heart will say, well, but all the news reports are saying that I should be doing this. But the chart may be saying something completely different. And what I'm suggesting to you is that the chart is unbiased. It has no agenda whatsoever. It has no purpose other than to display information to you in an objective format. Any bias that the chart contains is what you bring to the chart yourself. So if you have a positive or negative bias, you will look for things. This is called confirmation bias. You'll look for signals that align with what you think, and so you'll use the chart to justify those. So you've got to be careful. There's so many elements of depth when it comes to trading, right? Okay, so back to the point at hand, how to get back on board. Point number 1 is, and I have 4 of these, point number 1 is don't be in a rush to buy the dip. Don't be in a rush to buy the dip. What is low can go lower. What is low can go lower. What is low can go lower. Do I have to keep repeating myself here? Yes, I do. What is low can go lower, folks. So don't try to catch the falling knife. You know what happens, you'll get your fingers cut. And this is what's happening right now. So what I've been talking about for the last 2 weeks is the market has got to go through a capitulation phase. It's got to literally get to the point where everybody wants to just chuck it in and just say, I can't do this anymore. This market is just going to keep going lower and lower and lower and keep torturing me until I give up. And so this is what a lot of people will do. They will capitulate, they will give up, and every last person has got to get to this point, or at least from the market's perspective, it's got to get to this point. And that may take a little while, especially as strong as that euphoric rise was into mid-December. Okay, so that's point number 1. Don't be in a rush to buy the dip. What is low can go lower. Don't listen to people that are, oh, you should just buy the dip. Dude, hodl, buy the dip. No, there's no science to that. So part 2 is, let's look for typical bottoming signals. Let's look for typical bottoming signals. So with that in mind, first of all is just the structure of the candlestick. If you can see this, and again, I apologize, I don't have my little pen out while I'm on the road, but what you're going to look for is a long lower wick to the candlestick. It's also known as a lower shadow. So if you see a shadow like this, where you just see the line and not the body of the candlestick, the chunky body, what this is showing, and maybe I should blow this out a little bit so you can get some depth here. What we're looking for is a long-legged candlestick like this, that where the price goes lower. What this is indicating is that sometime during that 24 hours, the price went much lower, but then was pushed higher again. And this is what we want to look for. We want to look for candlesticks that are like that. In fact, there's actually a name to them. There is actually a name to them, which is called the hammer candlestick. And I'll see if I can find some examples of this for you. Here's a good example of a hammer candlestick here, this green one. You can see the price was going down, and then boom, this is what we're looking for. A hammer candlestick will get the majority of the bears on the wrong side of the price action. Here's a hammer candlestick, or one very, very close to one, like this. So we'll go back and we'll see if we can find a few more here to show you what a hammer candlestick looks like. Again, kind of striking out here. Let's see if we can find some more. Here's a good example of a hammer candlestick. In fact, this is almost perfect. This is a hammer candlestick, long-legged, lower shadow to this. Now, this didn't end up with much of a bounce, but this is exactly what you want to look for. So this is a typical bottoming signal, is a hammer like this. Now we can also see like 2 in a row, and 2 in a row like this hammer candlestick are usually pretty good because that's called a tweezer bottom. Now sometimes also what you can see is the initial swing lower and a test of the bottom again. This is called a double bottom. This is not exactly a double bottom here because this is a lower low. We'll see if we can find a couple here with some of these. So that's a little bit of a lower low. That's not a double bottom. So again, we're looking for patterns. We're looking for ways that the chart is showing the emotion of what's happening in the market. This is what we're trying to do. Again, this is not quite a tweezer bottom here, but that's close to it. Not quite a tweezer bottom. So again, we're getting back to today's price action, and again, none of these really look like bottoming signals yet. None of these look like bottoming signals. So as we go forward into this week, I will certainly call them out if we see a bottoming signal, and you'll know it. You will know it when we get the final capitulation, because you'll be able to go back to that and say, wow, there is a huge bottoming signal. So one last rule here: the taller that those candlesticks are, the more range to them, the taller that they are, the more emotional that they are, the better that they will work. Okay? So now I'm going to go back to part 3. Part 3 of the rules that we're looking for is what's called a trend line break. So you can see a fairly clear trend line. And I wish I could draw this line here, but you can see a fairly clear trend line. Along the way, we can connect all of the significant lower highs along here. When the price breaks out into disbelief phase, it will break that trend line. Now, this will be one of many, many signals that we're going to put together for this. So rarely is it just one signal by itself is a reversal made. It's usually a whole collection of signals. First of all, you see bottoming candlesticks. You'll see trend lines, downside trend lines, be broken to the upside. That's a good sign. And then the next one, which is part 4, is what I'll call a change of polarity reversal. So before I get to part 4, though, I want to talk to you about trend lines. I want to finish out this point on trend lines. Like, here's a good example of this trend line here. You can see this trend line here, which connects the lower lows, lower highs, and everything like this. This is all the lower highs along here are connected by this. Well, this gets smashed to the upside. So not only does disbelief come along at the same time, and that's, oh, by the way, that is called a bullish engulfing candlestick. It's a great big green candlestick that just completely blows away everything else behind that. So a lot of signals come into play at once at the same time. First of all, we get the disbelief move. We print a higher high. We also blow through that descending trend line. So many, many signals converge there to basically say, look, hello guys, it's going to be moving higher. So the last point is number 4 is more of just, this is what I call swing polarity. So from a higher high here comes a lower high, lower low, lower high, lower low, and all of a sudden you go from a lower low to a higher high, higher low. We have changed polarity now. It's starting to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. This is an uptrend according to Charles Dow from the 1930s. So this still works, and this is why price action is the best single indicator that you will ever learn from. It's not going to be one of these colorful squiggly lines that are on my chart here. It's actually reading the swings, and the price action is the very best time that you can spend, just you and your chart alone together. And this will make more sense of what's actually happening instead of reading through reports, reading through CNBC, reading the Wall Street Journal, or Investors Business Daily, or anybody else that doesn't really understand cryptocurrency and trying to understand what's going to happen next. You can't predict the future. However, the price is always trying to show you what's happening to it. Okay, so I've made this a little longer than I should, but I know everybody is, not everybody, but a lot of people are out there hurting right now. They're in pain, and this is what financial markets do. They go through periods of pain, they go through periods of euphoria, and understanding what to do during those periods, it's called the principle of maximum adversity. and it will try to find your point of maximum adversity and get you to make those decisions that you will regret later on. So with that in mind, I'm going to wrap up tonight's session. Hopefully that helps. That's 4 points on how to get back on board, as well as the 4 phases to the market rally. Lots more to talk about as we go forward this week. And so we'll be back here Monday evening with the next edition. Hope you guys have a great weekend, and we will talk to you then.